Welcome to this presentation of assurance and digital risk mitigation. It probably take about 15 minutes, and my objective with this, 15 minutes of your time is really just to hopefully um, open your eyes or enlighten you on the scale of digital risk as a problem for large enterprise. So I'm going to start with this statement because, frankly, assurance is an imperative for business critical digital risk management. So let me read that slower. Assurance is imperative for business critical digital risk management. And why is that important today? Well, because about 80% of major businesses are invested in digital dependence, whether they're using applications, third-party networks, third-party clouds, and SaaS services. That dependency is obviously integrated now, interwoven into business critical processes, delivery, customer experience, and employee experience. Now, when something goes wrong now, which it does about 10,000 times a year, and it's growing, the cost of downtime we estimate at 300K. And it's kind of revenue loss, recovery costs, challenges around indirect costs, and of course, potentially, if you're in the financial services industry, regulatory costs. And I think you'll see, I'll speak about it in a minute, that that's going to affect other industries. So this is not a small amount, right? If there are 10,000 outages a year, chances are a large company is going to have three outages, 300K per outage, 900K. So the most important question is to a big company is, would they invest 250 grand, which is a typical decent installation of assurance, to save 600 grand or 650 grand? So, and that's really the start point. And frankly, if you remember nothing from this presentation of 15 minutes and just this slide, then great. You can log off now and my job's done. And basically have an outage here that's affected two companies, company A, company B. Both of those companies were obviously impacted. However, the difference in downtime, 2 hours versus 4 minutes, is significant. And it's significant in cost, estimating maybe this particular example, 192K cost of downtime versus 6,400. Now, as I said, this is kind of a bit of a Pulp Fiction presentation in the sense that I'm giving you the punchline on the third slide, and that is the difference between company A and company B. Well, company B, customer B, is using ThousandEyes, and their mean time to resolve or mean time to identify is just obviously extraordinary. So when you look at this from a risk standpoint, there are a number of considerations for digital dependence. And if you're in any of the four industries on the right-hand side, so financial services, utilities, transport, and healthcare, regulation is already here for financial services, and I think we will see it coming for utilities, transport, and healthcare. So why? Because every one of those industries adversely impacts human beings when business critical processes can't happen. So can't pay your mortgage, or you can't get on a train, or you can't heat your house, or you can't get your MRI scan while you're about to go in for surgery. I know those seem oversimplified, and they probably are, but the reality is those four industries in particular are the ones that affect human beings in a life impacting way. Let's say that. I've already mentioned the volume of outages, but what we saw with CrowdStrike back in 2024 is that, it's a 6 billion problem. When something goes wrong as big as CrowdStrike in one day, cost industry 6 billion, and only 1 billion of that was insurable. Now, so you easily get to 300K of downtime per hour, easily 300K per hour. And I actually don't mind if a customer disputes that. So if they say, well, I think 300 grand an hour is too much. Okay, well, what do you think it is? And even if they say it's 50 grand an hour or 90 grand an hour, it is still a lot of money to lose if you have a multi-hour or event outage. So the difference between companies that are going to compete powerfully in this space and others is those that have full digital resilience, which means they're assured, resilient, and compliant across their entire technology stack, from the edge to the cloud. And what they get in return for that is lightning speed or light speed, mean time to identification, and mean time to resolution. Now, you can tell by watching this video, and hopefully if you're seeing my talking head, you can see my age. I never thought that in my lifetime I'd be sharing a slide that has this on it. I really didn't. a period of time in my career where I'd be working with AI agents already happening, AI apps. I've actually recently been for a health check, and the triage in was a robot that I responded to. And I haven't yet worked with a robot like you see on this slide, but or humanoid, should I say? But I have actually had interactions with robots where they already used in base experiences. And if you check on my LinkedIn, you'll see I interviewed one a couple of years ago at Gitex. What does this all mean? Well, it means that the problem that we were talking about 3 slides back is just exploding. So just to give you some interesting statistics, there are around 2.5 billion prompts a day right now going into ChatGPT, just ChatGPT. Let's ignore all the Anthropic stuff and everything else. Just ChatGPT, 2.5 billion. That's human prompts. They reckon that by 2025, 2026, we will already see 50% of internet traffic being bot related, where the demand to build data centers, 10 and 15 gigawatt data centers is unprecedented in the demand and the time required. Let me not even get started on the energy that's required and the cooling. But the other thing that we're starting to see is some predictions around where will we be going by 2028. And by then we'll already have full agent to agent interoperability. So we're going to see a scale of agent to agent, somewhere around 100 billion prompts a day. Now, if you think about what's happening today in terms of daily prompts across the internet versus where we'll be in just 2 or 3 years, honestly, the infrastructure is not ready. And what we're doing in this space of edge to cloud transparency is kind of second to none and is internet ready from an AI era point of view. So we are already able to assist those companies that are in a race toward AI. Now, when I used to show this slide, it used to have 3 trillion transactions a day on it, and that was by 2026. Well, now they're predicting 20 trillion transactions a day across apps by 2028. So let's just pause there for a second. I mean, what you probably should do is write down what 3 trillion is on a piece of paper so you kind of really can grasp the scale of this, because 20 trillion transactions a day in terms of flow of money. Remember, this is not just interactions. This is also flows of transactions that are happening, money transactions. This is money flow. I'm buying something from an app through an app. I'm putting my transaction through that app, or I'm using the app to buy something and so on and so forth. A banking app, I'm transferring money. The explosion of AI-based apps means that the whole space is going to get out of control very quickly. Now, when I'm presenting this normally, and what I mean by that is standing up in front of a crowd, I always like to get them involved and say, put your hand up if you've been in a P1 call and you have experience of that. And I'm always surprised at how often I'm surprised that not everybody puts their hand up. And certainly this is a room full of technologists. Sometimes only 5 or 10% put their hand up. Now, I have been on a P1 call. In fact, it's how I ended up joining ThousandEyes in the first place. And it's horrible. Yeah, it can be really horrible. A lot of people all arguing about what's gone wrong, not really having full transparency as to why. Maybe application owners or third parties are saying it's nothing to do with them. The network owners are saying it's nothing to do with them. And in the middle of all of this is a customer or customers and employees who are suffering because they can't do something that they need to do. So it's all about MTTI, MTTR. And if you haven't heard those terms, and if you're in a senior leadership role and you're watching this, then you need to really start to ask some questions about your business risk and what is in place to mitigate against an outage. What is our mean time to resolution on a typical outage? Because if it's hours, it's costing you big money. Here are some examples of just how much money it can cost in downtime. I'm just going to spend a little bit of time and actually on JLR and Marks and Spencer's. Both of those were cyber events, granted, but what's really interesting is the impact on them. JLR supply chain impact. Many of the companies in their supply chain could not provide supply to JLR, and of course had huge adverse impact of not being able to do their just-in-time supply. Marks and Spencer's, top online retailer, and they suffered, market share and market position because of that outage. And I won't go through them all, but clearly industry is affected when something goes wrong in this digital space. And in Europe, as an example, there are around 3,000 outages a year, and it's growing at about 35%. So this is not a problem that's going away. And then you add AI on top of that. Who knows where we'll be by 2028? After the CrowdStrike, this is every paper, by the way, in the United Kingdom, every headline, was something to do with the CrowdStrike event. And what's really interesting about that is how the insurance industry are now looking at business criticality and business dependence on digital as from an underwriting point of view. So if you're an organization that has business continuity insurance or business criticality insurance, whatever that insurance might be, and let's say traditionally, you had a warehouse and it was insured against flood or fire or theft. Now the question is, what impact to the business is there if there's a digital outage? And how much is that from an insurance point of view? And what mitigation is in place by the company to minimize the impact? Because frankly, the volume of flights that were cancelled, you think about the shareholder impact in CrowdStrike, which fell 13.5%, like $11 billion in a matter of less than a day. So what is assurance from ThousandEyes? Well, here's a topographical map from the edge to the cloud, or to a SaaS service, or it could be to a data center. And frankly, in simple terms, layperson's terms, in the middle of all of this, you have a lot of unowned stuff. So when whoever it is on the edge, whether they're in a home office or an enterprise, or they're working in a coffee shop and they're trying to get to whatever it is on the right-hand side, could be Jira, it could be your application, it could be any number of things, right? Could be Microsoft Teams that they want to use, could be anything. The middle bit is out of your control. It's not your responsibility. No, it is your responsibility. And that's the point. I think what often happens when something goes wrong, they try and apportion blame to the third parties that are in the middle, whether that's the enterprise network or network services or cloud connectivity or the third party themselves. The reality is it's not your fault, it's their fault, but it is still your responsibility. Your customers are not going to care that a third party SaaS service wasn't working or the network was down that you're using. They care that when they're on the edge and they're going to their destination in the cloud or whatever it is that you're serving them, that they can get to it successfully. And that's your responsibility. Now, there's a lot going on in the middle. And it's very complicated, it's very complex, and it can be really, really difficult to find when there's an issue. And in a nutshell, that's exactly what ThousandEyes does. We solve the most complex journeys very quickly with visibility across the layers. So it's correlated view. That means that you can see overlay and underlay and pretty much pinpoint what is wrong and where it's gone wrong within 15 clicks, which could be as quick as 15 seconds. But let's say even in the worst case, 15 minutes. And it's very, very rare that we are not able to identify a problem. Now, I'm going to take just a minute to explain to you very, very quickly how ThousandEyes works. So what you see at the bottom of the slide is a bunch of agents named. Well, those agents are what we use for visibility. They're planted in the cloud, they're planted on enterprise infrastructure, they're planted on endpoints, and they live and reside invisibly, but doing their job. And we're gathering around, I mean, I've heard all sorts of numbers, but I'm just going to say somewhere between 2 and maybe 5 billion data points a day from these agents that are transacting traffic across all sorts of infrastructure networks. And in that journey, they're gathering information about what's working, what's not working. And if you ever want to see that live, you can go into www.thousandeyes.com/outages, and you will find a free outages map, which tells you which applications and which networks are having issues and where in the world they're having them right now. You could do it right now while you're watching this. Open up your phone and go onto that web domain. Now, as you might imagine, we were acquired by Cisco, and on the left-hand side, you have all of the spaces where ThousandEyes is integrated, and in fact, that's growing all of the time. So we're now integrated into some of our security posture and obviously devices, whether it's a Meraki device or one of our routers and switching, and then also actually into our collaboration suite as well. But what's also interesting is we're now fully integrated into AWS and Azure. Now, what that information or all of that data is going into a data engine in the middle, an assurance engine, let's call it that. And that's creating highly opinionated data, which it outputs into the platforms where you can consume it, ThousandEyes, maybe one of the legacy dashboards, but it could be anything on the right-hand side. So we have open API, we have open telemetry, which means that we can integrate with most things pretty well. And what that means is we're very seamlessly able to be inserted into any of your propositions and any of your build, whether that's in a SOC or a NOC or indeed if you just have something relatively informal in place, you'd be able to gather data from our observability. Now, when something goes wrong, you can see from this slide, the world press trusts ThousandEyes, right? They turn to us to find out or to let them know what happened, who was responsible, where did it go wrong, when did it go wrong, and how long will it take before it's fixed? Because, of course, I'm here significantly evangelizing around what we do. But the reality is we are trusted for what we do, and we're trusted by some of the biggest names in the public domain. Now, I did say that if you remembered nothing from this presentation and only this slide, then, so I thought I'd just remind you about this slide so that you have it in your mind's eye, that the difference between a 2-hour outage and a 4-minute outage is ThousandEyes. I'm going to spend just a minute talking about compliance and regulation, because with Digital Operations Resilience Act, which is a European act for the financial services industry governing digital resilience, and an organization being required to prove that they have resilience and that they're able to comply with the regulation. What this slide actually shows is that you can actually be compliant with regulation, but not necessarily fully resilient. So I'm not going to spend a lot of time on this subject, but if you want to know anything about the DORA Act or anything to do with financial services and digital resilience, we have a whole area within our website in ThousandEyes. If you just search ThousandEyes and DORA, so DORA, not Dora the Explorer, by the way, I do get asked that a few times, but you will find a whole archive of really valuable information to understand what resilience looks like and how you can be compliant. I have a view which, and you'll see this if you ever look at the One Cisco story, assurance, resilience, and compliance, you could put security in there as well, should be the underbelly or the foundation stones of everything that you build above, whether it's a network, a cloud, or you're building an application, or you're doing anything in AI, you should ensure that there's assurance, resilience, and compliance and security underneath. And, when I'm talking to our partners and our channel about this, I'm constantly reminding them that everything that you build should be assured, resilient, and compliant. It's a kind of 101 for the modern business. It's really, I'm sometimes alarmed, I use that word, when I come across big companies that just don't have basic levels of assurance, digital risk mitigation, or even compliance structures in place. We're constantly integrating into the Cisco world. So if you've got anything that's Cisco, you probably have some ThousandEyes embedded or the ability to leverage some ThousandEyes. So again, reach out to one of your account team and you'll find out more. And as I said, I'd go as fast as I could. That's just a quick overview of the scale of the problem, how easily ThousandEyes can slot into solving that problem, or certainly mitigating against the problem. But importantly, hopefully at the end of 50 minutes, if you are not assured, resilient, and compliant in regard to your digital dependencies, you should reach out to someone from our team or from the Cisco team and definitely ask more about what you can be doing to make sure that you have compliance, that you are resilient, and importantly, you have some form of mitigation in place if and when something's going to go wrong. And I don't say this lightly. Probability in the next 12 months is that you will have 3 incidents that will impact your business adversely, and will probably cost you somewhere between, I'm going to say, 350,000 and $1 million. Thank you for listening, and thank you for your time. And I wish you all the very best. Thank you.